Welcome everybody to the 40 Finance channel. My name's Jeff Beers. Today I'm going to look at 4 stocks that have been trending pretty high on coronavirus news, so to speak, and make the argument that it could be time to sell high on these stocks and look back for another opportunity maybe to jump in the long term. But take profits while you can, because these things have really shot up. And as always, these videos are for entertainment purposes only. Please talk to a professional financial advisor before taking on any risks with the stock market. But if you do enjoy stock market analysis, investing ideas, and personal finance videos, then please subscribe to the 40 Finance channel. It's been great to see the channel grow so fast lately, and I appreciate everybody's support. All right, just some quick criteria for this video so that we're all talking on the same plane. We're looking here at stocks that have run up on coronavirus news, so aka solutions or industries that would benefit from the health crisis. And my direction here is to 1, avoid starting positions in these companies right now until you see a better opportunity. So if you're not in, don't get in right now. Number 2, if you were smart enough to get in earlier, let's just say last year or January, February, before these prices started to run up, it might be time to think about locking in your profits and walking away. And that leads to point number 4, which is with these high prices, I think there's a pretty good chance that you'll see lower prices from these stocks coming forward. I personally think we're going to have more than one market dip for the rest of the year at bare minimum. So what you could do is sell high, so to speak, buy in lower if you're in love with these companies for the long term, and you can still get in for the long term, but you don't have to do it when prices are at such a high point. All right, first stock on the board today is Zoom Video Communications. This one's been all over the news, and Zoom provides that sort of online meeting capabilities. Very popular platform across businesses and even schools. My kids are doing some online learning related to our community schools. They're using Zoom meetings, and several other companies have been pushed into trying platforms like Zoom due to social distancing. Zoom price today at $124.51. From a year-to-date perspective, this stock's been everywhere from $60 all the way up to $164.94. And what we see on the 1-year chart is just the obvious run-up from sort of buying the news, right? That the world is going to be forced into using platforms like this, which is obviously true. And a lot of speculation that Zoom Video Communications is going to inherit, a lot of money and revenue from the circumstances that the world faces. You have a PE ratio today of 1383, so pretty high. I did include forward PE on the stocks here today, even though I'm not a big fan of it with so much uncertainty in revenue. I think that forward PE on these particular 4 stocks might actually be relevant because they're all sort of in a position where they're going to drive revenue despite the events going on around them. So nice little forward PE decline down to 263 for Zoom. And at the end of the day, theoretically, this is a good time for Zoom. They're getting massive user signups. They offer a free version of their platform, which has allowed many people to experiment with it. And I got to tell you, as a user, the free platform that my kids are using at school and I've used for some video calls, I don't even know what premium would be because this thing works pretty well out of the gate. And I know that Zoom's been accused, they have some back-end models of selling data to other companies based off their free user signups. For business purposes, I don't know how profitable that is, but I can tell you from a potential subscriber standpoint, I have no reason to sign up for the paid version, at least from what I've seen now. Now, Zoom could obviously pull the plug on free now that they've got these millions of people signed up and try to force them into a low-cost subscription model. We'll see what happens, but just to call out, even though Zoom is gaining massive, market share and user signups, I personally haven't seen anything outside the free version that even raises my eyebrows. So as far as I'm concerned, Zoom for free, at least for me, and that makes me a little concerned about revenues despite the high tide of usage. But either way with Zoom right now, the price has run up big. They're in every article related to sort of coronavirus stocks to watch kind of thing. And while I can understand the bull case here, I think that there'll be other opportunities to jump in at a lower price. Looking at the tip ranks dashboard for Zoom, and we have quite a few analysts covering the stock because it's a trending ticker, and you've got 6 buys, 10 holds, and 2 sells. Median price target is 110.77, and that is actually 11% downturn from today. So you can kind of get the feel here that analysts are like, well, we might have reached the top of Zoom, at least in the short term. And even though you got the 6 buys in there, 10 holds is a pretty strong indicator that analysts are starting to look at this one a little more closely and asking themselves, how much room really is there left to run on this one? All right, next one on the board is Digital Realty Trust. And this stock is popular because basically this company houses all the major data centers for big tech companies. This one is technically categorized as a REIT, and the concept here for DLR is that they make all their money by building gigantic data warehouses at different points all across the world. It's an international company, and then the big tech companies pay for space to have essentially cloud backups and data backups of all their essential information dispersed safely through redundancy in different points across the world. So it's a great business model, and I'm not going to knock this company as a up and comer. They have a proven business model, and they're growing fast. The call out right now is that they're in the news a lot as a business model that succeeds despite the health concerns that we have going on. And so you've seen a pretty significant price run up, and it could be an opportunity to steal some profits to buy into some other downtrodden stocks. Not that you can't come back to DLR in the future, but if you got in low, this could be the opportunity to sell. DLR price today at 148.29 on the 52-week range. They're hovering right at the top. The range is 105 to 152. You got a PE ratio today of 63. Forward PE goes up ever so slightly to 68. And one of the cool things about DLR is you do get the dividend, 3% dividend as of today. But when you look over to recent history, and we know that the stock market is generally speaking going down with a couple blips here and there. DLR has actually run up, not only because it's a dividend stock, but for the most part, you can expect relatively predictable revenues for a company like this because they're essentially a storage play. So this is one where the money has piled into DLR, I think more or less from a safety range, right? There's so much uncertainty in the market, and there's a lot of opportunity to park your money with DLR, get a small dividend, and maybe wait for other opportunities. I guess the argument that I'm making here today is the recent pop-up on a company that basically shouldn't necessarily have huge growth this year from a revenue perspective. While I think all their bills get paid and business is doing well compared to what other industries are doing, I don't see the run-up as a sign of revenue spiking. I just see it as a sign that folks are looking for some safety, which means when those people get out, the stock price inherently will go down. All right, looking at the tip ranks opinions from the best performing analysts. We have 3 analysts covering this one, 3 holds, median price target of 140, which is minus 5% from today. And again, what we're trying to think about here in this market, you have stocks like this, good quality stock plus dividend, right? It's a nice combination. You got a median price target of minus 5% from today, which isn't like a huge loss, but guys, there's so many downtrodden stocks out there. There's so many opportunities to make, you know, plus 30, plus 40, or more percent gains that I don't think that you need to look for safety and pile in with the masses on DLR. I think that it's a nice addition to a portfolio for the long term, absolutely. But if you did get in early and you've got some profits here, maybe think about taking them and looking for some stocks that could run up a lot higher. All right, next on the board today is Teladoc. And Teladoc's in the news because they're sort of in that remote healthcare system of having doctors and healthcare professionals available through basically video conferencing, right? So very similar in some ways to what we saw with Zoom. It's just their platform is built for medical professionals, so you have some privacy safety in there. You have some integrations with other health systems that make it more orientated to like a healthcare initiative. And this is a long-term play for Teladoc. They're trying to change the game in the medical world, and they have an opportunity on paper, I would say. This will be an interesting test of time over the next 3 to 6 months to see if their model is actually scalable, if they are indeed a unique solution that others will have trouble replicating. I think it's important to point out with Teladoc is, you know, this is one where the news has really pushed the price up that we're going to see here in a second. And it's hard for me to put my fingers around, you know, just what the moat of a company like this is, because video conferencing is basically widely available across a number of platforms. And then you have the health insurers that have the opportunity to basically create the same thing. I don't know that for sure, but it's a thought that pops up in my mind. All right, on the Teladoc side, you got a price today of $146.66. from a 52-week range of $50 to $176. And you see on the 1-year chart here, this thing has absolutely exploded. You know, back in, let's just say, it looks like October, November timeframe, this stock was $80, right? And now we are where we are today, almost purely from a trending standpoint. So you got no PE today, and I did not see a figure for a forward PE. So this company is not profitable yet. And obviously though, the purchase of a stock like this, you're banking on healthcare, health insurance, integration, you're banking on the world changing towards more of a telemedicine kind of thing, which, you know, I think has certainly become more of a reality during this time period. But at the end of the day, I guess you have to ask yourself, what is Teladoc offering? And if you got in low on a speculation play, it just seems like you can take your 100% gain and walk away into some companies that are probably more foundationally sound and offer significantly more upside compared to a company that's near its 52-week high. All right, looking at the tip ranks dashboard for TellaDoc, median price target of 134.21. That's an 8.5% downside from where we are today. So again, these are analysts. They're starting to see the top for TellaDoc. If you're already in, it might be time to lock in those profits. And if you were chasing the news and seeing TellaDoc as something fun to invest in because of the opportunity, I would say you're buying way too high right now. All right, number 4 on the list is DocuSign. And DocuSign is a company that I really like from a standpoint of usage. They've been in the technology game for several years now. They offer the opportunity to sign contracts and verify agreements online without the old game of, sign this paper, fax it back, sign this paper, mail it back. DocuSign has made that process digital, and they're widely regarded as the leader in the space. The catch with DocuSign is not so much that it's a bad company, it's just like it's in the news all the time right now because, again, you're offering sort of this like cloud internet alternative to things that you used to do in person or in the office. So when that interest spikes and money starts flowing into things like this, you get a price run up that simply doesn't make sense as an entry point, but could make sense as a selling point. Price for DocuSign today, $90.63. No backwards PE. The forward PE is speculated at 153. 52-week range on DocuSign, again, inching near the high. You had $43 to $98 on the range. Today we're at 90. And you'll see on the 1-year chart, it looks like close to January, they had a pretty nice pop there. They did have some dip with the market, but now they're right back up near the 52-week high. So bottom line on this one, I'm just not sure how much more room it has to run. You're going to read it in a lot of news articles as, a safe play during this health scare. And I do agree that these services, the demand for them certainly is not going to be going down for a company like DocuSign, but I just don't know what's left on the run rate for a company like this over the next 12 months. Looking at the tip ranks dashboard, again, we're getting some feedback from analysts that says, you know what, this one might have reached its peak. So like the other 3 on the board, if you got in early, you got profits here, my guess is you could take them, still get back into DocuSign on the next dips in the market, which almost for sure is going to happen just out of sheer volatility that the market is going to face. So even if you're a bull during the health scare or a bear, I don't think it matters, because one thing that is going to almost certainly be true in this market is a lot of fluctuations as the world figures out when it's going to get back online. So if you got some profits in DocuSign, think about taking them now. If you're interested in the company, my 2 cents is to wait for the next dip. All right, guys, so those are 4 trending stocks that you might consider selling. I certainly would not jump into any new positions on these stocks at their current prices. I think all the companies here, I tried to pick companies that are intriguing, right? That actually have a bull case theory. So hopefully you enjoyed this video. Let me know what you think about the price targets. And of course, if you enjoy stock market content and deep dive analysis, then please subscribe to the 40 Finance channel. I'll see you on the next video.